Welcome to ATI Pro Media live at 9 a.m. Thanks for joining us today. It's a beautiful day, Wednesday here, right before the Easter weekend. And all eyes are going to be on weather, that forecast here coming up over the next week and going forward. How much rain are we going to have? Too much rain? Are we going to go from too dry to too wet pretty quick? Sounds like it today, but we'll see what actually happens here. Corn's catching a bit overnight. Got a lot of your grain markets up and green on the screen. That's good to see. The equities, though, are sagging a little bit here out of the gate. So we'll jump in, quote up your markets, and dive into some show here. Looking at May corn's up 4 cents, 4.85 and a quarter. New crop D's corn is up 4.5 at 4.68 and 3/4. May beans up 4 and a quarter at 10.40. New crop beans are 2.5 cents firmer at 10.32 and a half. 10.32 and a half. Soy oil is firmer. Soy meal is a buck firmer at 3.02. Chicago wheat is 7 cents higher at 5.49. Looking at KC wheat, 7.5 cents at 5.60 and a half. New crop July KC wheat is 6 cents firmer at 5.74 and a quarter. Feeder cattle market, you got April feeders are going to come up and settle here tomorrow. So let's look at the May feeders. They're $1 firmer at 10.83. April's 10.90 and a quarter, and the index is 10.8807. So April futures are $2 firmer than the current index. Looking at your live cattle, April live cattle $1.50 higher at 206.30. June live cattle at $1.45 firmer at 201.20. Hog market is catching a nice bid there. The June contract is up $1.45 at 96.62. And crude oil is up nearly $1, 62.29. Diesel's 2 cents firmer, 2.10. And nat gas a little bit weaker, giving back 7 cents at 3.25. The Dow's down 306 points. The S&P down 75. The Nasdaq down 429. The Russell is 11 points weaker. Bitcoin's given back 255 points at 83,905. Gold's up, silver's up, and the dollar is down. So good to see green in the grains. We love green in the grains here, up 4.5 cents in your May contract. We got new crop is breaking recent highs while the May contract is just kind of retracing where we've been. But we're definitely retracing the February to March sell-off, but the May contract hasn't quite broke above last week's highs, while new crop corn is actually at 468. Those recent highs in that 466, 67 area. We're breaking into some new territory here, and it's good to see. And beans are testing that 200-day moving average. I might try to pull a chart in if I can real quick. We'll see if we can do that, just because it's worth looking at, in my opinion. So real quick, throw this chart in. Maybe. Here we go. Here we get that there. That's new crop corn. Look at that bad boy. Okay, got some new ground there, breaking that high like I was mentioning there. Let's look at the May contract here. And this highlights where we haven't broke into that new ground there. So quick snapshot of your charts. Let's throw up the Nove bean chart as well. That red line's a 200-day moving average. It's been previous resistance, and we're knocking right up against it. Can we break above that? If we get too much rain and they start worrying about planting delays, we might get a little fund to go power that sends us higher. Let's hope for that. And rain's always a good thing too. So back on the main screen. I'll get that out of there, out of your hair, Rick. Let's dive through some headlines. Tony, thanks for covering for me yesterday. She does a fantastic job. Second time covering for me, and I got to say, the first time was pretty awesome, and the second time she outdid herself once again. So thanks, Tony, for jumping on and covering for me yesterday. Dove into a lot of things. To me, though, the bottom line going forward, the trade is going to continue. Watching the tariff talk. Also going to be monitoring weather here in the U.S. and also in the safrihna corn crop, South America. A little friendlier forecast down there in Brazil, looking like the threat of production problems in South America has turned more friendly and less threatening. But eyes are on U.S. planting concerns going forward and catching a little bid in your markets here this morning. So good to see. When we look at the global weather front, though, looking at Russia and Ukraine from T-Storm Weather. They did a webinar with some of our commercial customers yesterday. Great webinar. We're going to maybe see if we can steal some tidbits from that and pass that out to our premium guys. But the last 14 days 60% of Ukraine and Russian wheat was actually wetter than normal. Russia, when we look at the last 30 days, 2% of Russian wheat was drier than normal. 2% of Russian wheat drier than normal. The last 30 days, the last 60 days, 42% of Ukraine wheat drier than normal. And the last 60 days, 13% of Russian wheat drier than normal. So got a little concern there in Ukraine, but the last 2 weeks have been a good thing for Ukraine and Russian wheat. And we'll see if we get a nice bump here and some moisture in U.S. wheat country as well. We certainly need it. You saw some footage yesterday of that cow video that Tony rolled while she was quoting up the markets. That was my cows. And there was some dust flying out there. We need some moisture out here in the Western Plains to ease things up. So next on the headlines here, what's caught my eye? One of my favorite sections of the premium wire that goes out to customers, and ATI research pumping that out. But we had NOPA crush yesterday, March NOPA crush data. It came in at 194.6 million bushels, which was about 3 million below the average trade estimate and 2 million less than last year. It's the second month in a row of lower than expected runs on that crush rate. It's beginning to look a lot like the USDA may be 10 to 20 million bushels too high with its crush forecast, especially as South America crop comes online. So that's in the what's caught my eye section that comes out in the morning wire every day. Got a new tidbit direct from ATI research going out to premium subscribers and ATI customers. Next headline here, Brazil's expected to require nearly $7 billion in ethanol production investment. That's a Bloomberg headline. A couple others reporting the similar headline. But investments in ethanol production in Brazil are expected to reach approximately 39.5 billion reals, which is equivalent to about $7 billion US dollars by 2034. Increasing capacity by 11.3 billion liters, according to federal energy research company EPE. Sugarcane ethanol production expected to grow from 48.8 billion liters to 51.5. Corn ethanol production expected to grow from 8.6 billion to 15.5 billion, which is nearly double, if my math is right. That's almost double. Second generation ethanol increase, which I don't even know what I'm gonna have to do some research and some Googling to figure out what second generation ethanol means, but expecting that program to grow from 200 million liters to 1.2 billion liters, which always questions me. It kind of reminds me of the biomass type ethanol that we had big high hopes of and kind of failed to come to fruition here in the US. But ethanol becoming a bigger piece of, it always has been a big piece of Brazil, but more corn ethanol expected to continue to grow down there, increasing their just domestic corn usage internally, which a lot of their corn crop hits the export market, goes straight out the door to the export market. So changing some of the dynamics there. Dr. Cruz hinted about this in last week's premium content deal that we talked about, and Tony talked about it yesterday as well, about Brazil's increased domestic usage there. So another Brazil headline, China's state-run COFCO reportedly hiring sizable number of workers in Brazil. Positions are being offered in sales, trading, operations, and administration. The reported increase to hiring is in large part highlights the importance of Brazil ag export market to China and the trade war that the U.S. is now in with China and the tariff on imported Chinese goods. So China continues to make investments in Brazil. Brazil ag. Is Brazil going to be the big winner of the U.S. tariff and trade war? It's one of the questions a lot of people are asking and wondering going forward. So cattle markets, got a cattle on feed report Thursday. We'll see what happens. That's tomorrow. That's coming up pretty quick. Today is the final day to buy LRP coverage ahead of that report. There will be no LRP offered on cattle on feed report days tomorrow. The markets are closed again on Friday, Good Friday. We've got the Easter weekend coming up. So if you're not getting stuff covered today with LRP, you would have to wait till after that report and look at LRP coverage tomorrow. So when we look at the cattle market, the index has bounced back a little bit. It's up 91 points yesterday at 288.07. Keep in mind that April futures is 290.20. Those will come together tomorrow and settle out. We saw the choice cutout. It was down 20 cents yesterday at 335.42 versus the day prior. It was 267 lower than week ago on the choice cutout. We've seen week-to-week declines for 6 consecutive days now. So we want that streak to stop. But as long as it stays stable at that 335 level, I think that's probably a good thing, although we'd love to see it go higher. Cash trade in your cattle market is called steady. Asking prices are 208 in the south, which would be $3 to $4 firmer than last week's trade. We'll see what as trade transpires here. Anticipate some of that to happen maybe later today or tomorrow ahead of the Easter weekend. But probably most likely after that cattle on feed report tomorrow. So things to watch going forward later today. Fed Chair Jerome Powell speaks today in front of an economic club in Chicago. Going to talk about his economic outlook. So there will be macro market type of headlines probably generated from his comments there about tariffs, trade, and rate anticipation going forward. I believe the Fed Watch tool is placing about a 20% chance of a quarter basis point cut in the next FOMC meeting in May. So low odds of a cut, but it's still there that it might happen. I'm in the camp that it won't happen in May. We've also got EIA data out later today. We'll get a weekly supply and demand report on your crude and ethanol production inventories. Keep an eye on what's going on there in your market. So with that, I think we're going to get on out of here. Another quick show. Appreciate you guys joining me. The markets are presenting some opportunities, so stay on your toes out there. I know you're busy out in the field. Stay safe out there in the field. But always be looking at what things you can be doing marketing wise. And it might not be a bad time to, if you don't have those orders working, to get something working and stay flexible for the road ahead. Nobody knows how things are going to play out going forward, but it's a great time to get control of your price risk and protect you from having a bad day going forward. We don't want complacency to make you have a bad day, a bad month, or a bad year in farming. So stay safe out there. Thanks for joining me today. We'll be back tomorrow. Maybe we'll have a surprise guest. I don't know. No promises. See you then. Have a fantastic day.